Morning again, everyone. Welcome to another episode of Ivey Academy TV. I'm your host, Mark Healy. I'm the Executive Director of the Ivey Academy, the Learning and Development wing of the Business School here in London. Thanks, everyone, for taking time out of your day. We really hope you get some value here. If you've been tuning into these sessions over the past few weeks, you'll know we're trying to figure out what to do here and how to act just like everyone else. It's a bit hard to know what to do right now. We've decided that for now we should try to be helpful and figure out everything else later. We also recognize there's a limit to the kind of help we can provide. It pales in comparison, of course, to what lots of folks out there, whether they're in government or working in supply chains or grocery stores or drive-thrus, especially in healthcare on the front lines, are doing. Our friends in hospitals are having a really tough week. And so just know we're thinking about you, and the Ivey community is behind you and deeply appreciative of you. If you joined us last week for Professor Tony Frost's session, Strategy in an Uncertain Future, you probably left feeling a little bit more hopeful, or maybe even more discouraged, depending on which part of the economy you participate in and which quadrant of Tony's borked or not borked 2x2 you fall in. We hope you left feeling a bit more informed, at least, and well, you came back, so there is something there. If you didn't join us last week, no sweat. We're going to do a very quick refresher on the content and the frames, because in this session, we're going to actually double click and go deeper into some of the ideas around the Canadian economy that we think are most affected right now and most likely to be changed going forward, both in positive ways and with some risk. So Tony's back with us to help guide today's conversation. Tony, please say hello.
Hi, everybody. Well, good to sort of see you again, and welcome back to those who were with us last week.
And we're fortunate to be joined by three really smart Ivey alums that we think can bring a lot to the conversation, impacts on the economy. Janet Bannister is managing partner of Real Ventures. She's deep in the venture space, knows all the tech players in Canada. Kevin O'Brien is president and GM at WW Canada. He's, of course, quite famous. You may remember him from such films as the Ivey Alumni Association, AMIA, Secor Consulting. And John Schell, managing director, partner at Social Capital Partners. John is, I think he would say, a bit new to advocacy, but off to an illustrious start, having written a piece in March on the plight of a small business in Canada, which garnered a lot of attention. As always, I'm going to moderate and direct traffic a bit. Tony will be our lead interviewer here. We also have Sean Ackland-Grant with us. Sean's going to be our tech lead. More importantly, he'll be keeping track of curating questions in the chat and the Q&A. So Sean will come in and out, so will I, with themes that emerge from everyone who's listening and engaging with us as we move through the session. We're not going to be able to get to all the Q&A, just an FYI. So Sean, it's just more on that. And can you talk a bit about how this is all really going to work today, please?
Sure. Thanks, Mark. Welcome, everyone. So as always, we would love to hear from you during the session. You can send questions by clicking the Q&A icon in the bottom of the Zoom window. If you see a question you like there, you can also click the thumbs up icon to upvote that question and make it easier for us to curate. We're also going to be using the polling feature a little bit in a couple of minutes. So when you see a pop-up, just select one answer. Don't think about it too hard, and keep an eye out for that. Welcome to also everyone tuned in on the live stream. This full recording will be posted on our YouTube channel as well as the Academy blog. Everyone registered today will also get an emailed link with the slides and other materials. So thank you for joining us, and back to you, Mark.
Great. So we'll go to Tony in a second for a recap and a frame up. But Sean, we're going to put one poll up right away. We'd want to know who we've got with us, I think, right? So which part of the economy we're participating from. Could you put that poll live, please? And we'll just do that for a minute.
Okay, so our participants are now looking at a poll on organization size with 4 options. Micro enterprise, less than 5 employees, small enterprises, 5 to 99, medium, 100 to 500, and large organizations over 500. Very interestingly, we'll leave this open for another 10 seconds or so, but 50% are with large organizations of over 500 employees, then around 20% medium-sized enterprises. So I will end that poll now and show everyone the results. There we are.
Good.
Okay, great. So we know
Great. That'll help.
We know who's with us today. Tony, can we go to you for a quick recap of what you talked about last time, a bit of a frame for today, and then we'll get to our panelists in some more detail.
Yeah, absolutely, Mark. I thought what I would do is just give a quick macro kind of snapshot. That's what we started with last time. And of course, the numbers are coming in and evolving literally by the minute. So I thought we would just kind of run through a little bit of what's changed over the last week, a bit of the positives and negatives that we're seeing out there. And we're going to just share it with you a kind of a quick summary and recap. I think starting, I've never really done this before, started macro snapshots with discussions of viruses, but you know, at desperate times, desperate measures, here we go. So Sean, if we got that on the screen for folks to see? Great, so very quick snapshot. If you go to the next slide, we've got the positives and negatives that we're seeing. So let me start with the story, kind of the virus story, if you will. I guess I maybe start with the positive. What we're seeing, I think, is that some of the social distancing measures appear to be working in lots of jurisdictions. We're seeing BC numbers, especially flattening the curve and so on. Even as tragically the count, the death toll counts and things like that are hitting daily highs in some areas. And of course, those are lagging indicators in some ways, but just awful to see. Lots of news about testing too low in many areas as supply chain issues and kind of being overwhelmed by the demand are kicking in. Ontario's sort of front and center on that. So, you know, a little bit of positive, but still some really tragic stuff out there. On the macro side, I think probably everybody picked up the paper this morning and saw the really ugly numbers coming in from the real economy. Initial jobless claims, the US was over 6 million this morning. Those numbers seem to be maybe even understated as folks are actually not even sure how to file those claims. And just put that in context, you know, the US was adding somewhere around 200,000 plus jobs a month. And now we've got 6 million. And of course, that's just in the last period. It's well over double that if you put in the total. PMIs, the Ivey PMI came out this week, historically low number at 26. The only number I've seen lower than that is actually Italy's, which was 17. So all these measures of real economy activity are doing as lots of economists have forecast, which is they're falling dramatically. We are definitely on the elevator down. Whispers of, you know, D word, depression type of levels of unemployment, and some of these desperate scenes we're seeing at food banks and charities being overrun. So really, really horrible stuff. Although I would flag there, again, the issue that we talked about last week was what's most important is not so much the depth, but the duration, which I think goes to this next point on the negative side, which is that the OECD is saying, you know, for every month of containment measure that is put in place, which is, you know, the way the economy is contracting by both voluntary action by consumers, they don't want to go out, but also you know, shutting down into essential industries. 2% of GDP annual loss is what their annual GDP loss is what OECD is saying, and you know, that's then put into context with Trudeau yesterday saying, you know, it's going to be a few months probably, and you know, we don't know quite how long, but so some bad stuff on that side. You know, on the positives, I think if we were reminded of one truth this week, it's that the stock market is not the economy, because the stock market actually kind of has come bouncing back, and albeit with gyrations. But if you believe that the stock market is some kind of forward-looking indicator, this is probably positive. Central banks continue to engage in a very agile way, especially around credit markets, unlocking some of the liquidity problems that we flagged last week. So stabilizing, you know, investment grade debt, but now even further down into other categories of debt and so on. And more generally, we're seeing governments continue to say, albeit with you know, some variation, one thinks of Europe here, struggling to kind of marshal a Europe-wide response, but the whatever it takes mantra seems to be kind of where everybody's landing. And we do see, I think, some flexibility and iteration both by the central banks and government in the kind of programs and policies that are being rolled out quickly and adapted as new data comes in, feedback comes in, and John Schell is going to talk a little bit about that as well. And then for Canada, a positive sign that OPEC, perhaps the OPEC Plus group, might agree to an output cut to stop that other kind of dog pile of problems that we've got in our economy. So, Mark, that's a quick snapshot. I really would think we should get going to our panelists. Anything you want me to kind of deal with there on the macro stuff before we do that?
No, I don't think so. I just, if we could touch on your 2x2, just because I think it's a good frame from where different folks sit and their perspectives. That'd be good. Sean, can we go to that slide, please?
Good. Yeah. Well, those who were on the call last week will remember we did a little poll and on how impacted is your business. We have this little resilience matrix, which is I think the key feature is it's simple to understand. And you'll notice, when we polled folks on the call, nearly 40%, and then maybe this is reflecting our audience. I'm sure this is the proverbial, biased sample, but nearly 40% said the business models were holding up, either because you're in a category that is, counter-cyclical perhaps, or able to adapt and move towards a contactless or digital fulfillment. And as well as some sheltering with respect to financial strength. 7%, on the other hand, were feeling, I would say, this is not the place you want to be. The business model itself not resilient either. If you think of a lot of our service front-facing, consumer-facing service businesses being really impacted here, completely shut down, and then and we'll definitely want to talk to those on the panel who deal especially with small organizations who don't necessarily have the balance sheet buffer, credit line, or a sheltering corporate parent. So that's what we saw last week. And what I'd like to do is maybe enter into the conversation about business impact here with our panelists. And I'll start with Kevin. And you probably have, in some sense, the broadest landscape, Kevin, consumer-facing businesses being your expertise, and you're seeing, I think, thousands of touch points on a daily basis with your app and so on. Do you want to just tell us a little bit about kind of what you're seeing and your view on the impact here in the Canadian business, especially?
Yeah, sure. Happy to, Tony. Maybe if I just start with just so that you guys, it says WW Canada. Some folks might be confused what that is. You might know us better by the name we used to go by, which is Weight Watchers. So obviously we interact with, hundreds of thousands of members every day, and have been spending a lot of time thinking about the very factors that Tony just outlined. As I think about it, there's kind of the economic resilience of the business that you're in. There's the ability to go digital or virtual, or maybe that was already somebody's model. And then in the very current environment, there's whether you can be relevant or not. I mean, not everybody has relevance in a virtual world where people are worried about viruses and things. And you've seen some companies do quite well, both companies like what we're using, Zoom, but also companies like Peloton and things like that. Some people have found a real sweet spot in the current situation. If I think about where we're at and what we've been, our basic business model is that people get an app. And that app gives them all sorts of value, like barcode scanning and guidance on what to eat. And it gives, we've got to deal with Headspace, so you get meditation content, you get deal with Aptiv, so you get exercise content. There's a bunch of things that come with that app. Interestingly, for us in the current situation, about a third of our members also choose to go to a physical workshop every week. And so when we had to go on pause, it was a pretty big deal to us. Fortunately, we got ahead of it a little bit. We did it before we were told we needed to, but literally in the course of 6 days, we trained 6,000 coaches globally and taught them how to use Zoom. And we moved to a virtual model, which was a pretty incredible endeavor and made me very thankful that WW Canada was part of a global organization. But what it's meant for our members has actually been really, really interesting. What we're seeing right now is members are concerned about their health, both physical and mental. It's changed, a couple of weeks ago, it was more survival. Now it's people starting to get resigned to a new normal. But that resignation is not necessarily a positive resignation. There's a real overhang to that. People are feeling like things are out of control and they're looking for a way to take back control. people are looking for positive distractions, and people are looking for community. I was actually really quite pleasantly surprised. It was quite emotional when we turned on those virtual workshops and we moved from physical. It was a lot less about people actually worried about tracking their health, and it was a lot more about just having human contact in a positive way that wasn't a COVID discussion. So there's something in all of that that I think says a lot about where consumers are at right now. And you talked about the depth and duration. You know, if this is a V, as some people thought it might be at one point, I think that'll result in a certain outcome. It looks more and more like it's not going to be a V. And the longer it goes, the more we'll start to rewire how consumers are consuming, thinking, expecting, planning. There's some real long-term implications that might come out of that we can get into as the discussion goes on.
Yeah, definitely want to do that. Interesting to hear your own adaptation and into the digital world as we in the education space are having to do too. It's not easy, but you know, again, you do what you can. And also, I'm sure lots of people can relate to your story about the community piece. I mean, we probably all received invitations to, you know, virtual socials and get-togethers and things like that, which are obviously coping mechanisms that are imperfect but essential.
Maybe one
John, I want to shift to you to give us. Yep, sure.
I don't think we'll be able to wind back that clock either. I think virtual will be here to stay.
Yeah, interesting. Good. Well, let me move on to John. You know, you're really tapped into the small business community, John, and have, I think in your op-ed this week in the Globe and Mail, you know, or last week, you talked about, you know, some of the real dire situations that many of the businesses are in. I'd love to hear a little bit about, I'm sure everybody else would too, about your view on the small business landscape in particular. How are they being impacted, and kind of what's going on in that space?
Yeah, sure. I mean, I think 3 or 4 weeks ago, there's no way you would want me on this panel to represent a small business. I've kind of become a bit of an accidental activist on behalf of that community. And it all came out, I mean, I was I had a business in a plaza before I went to Ivey, right? So in the late 90s, and you know, I got to know the other owners, and when we started closing down shops, I got really worried. And when we started closing down shops, and then we had a government response that was about small wage subsidies and loans, I got even more worried. And so I started writing about that, and that's, you know, this is what's come out of it. And look, I mean, the small business community, especially the Main Street type local community business that I've been talking about, I mean, have been devastated. And I think, you know, it links to Kevin's point about what happens if we have become more virtual, but we'll get back to that. But I mean, you know, you guys have all seen it in your communities. You've been out for a walk, everything is closed. The minute a small business closes, the next thing is everybody's laid off, right? That's what happens the next day. And then I think the 25% of small businesses have less than 2 weeks cash buffer. 50% of small businesses have less than a month, and 75% have less than 2 months. So the next thing that happens is they can't pay their rent. And that's what's happening. According to a CFIB study, 40% of small businesses in Canada didn't pay their full rent in April. According to our study at our new site, savesmallbusiness.ca, 70% of small businesses won't be able to pay May rent, 70%. So, you know, we are talking about the widespread closure of community businesses, from daycares to barbershops to gyms to restaurants across the country. That has already started. I think 10% or something of local community businesses is the estimate, have already closed permanently, and that will just continue to grow. I think some people estimate at 20% a month. And I think the important thing to understand here, in order to I think there's a couple of things. One, the people who own these businesses, I mean, these are not these are not wealthy people, right? These are people whose businesses are paying for their family's expenses, you know, and generally have family members working in them. So it's very different from losing a job, right? So when you close down business, you effectively fire the business owner when it's a local community business, in the same way that you fired millions and millions of people across this country. But the people who are fired don't have business rent, utilities expenses, property tax, etc., to pay for as well. So it's not just a devastation of those communities, it's of families who will now have the overhang of leases that they've often personally guaranteed that they can no longer pay. So, it's both a small business tragedy, which is something employs something like 70% of Canadians, and a personal tragedy. And that's playing out right now all across the country.
Yeah, that's really a dire kind of overview, and thanks for sharing that with us. We're going to talk a little bit about what both the business owners can do, if anything, in this context, and of course we're going to talk a little bit about government response, and I know you've got a view on that as well. So thanks for sharing that. I do want to go to Janet, who is in some sense a related space, but lots of course tech venture startups or small businesses, but maybe a little bit different, Janet, given the nature of those businesses. Many of them kind of are digital native and so on. So, but I'm sure there's like some great stories there too. What are you seeing in the tech and venture community that you would want to report out to us here?
Great, thank you very much. First of all, it's a real pleasure to be here and back with Ivey alums, so welcome to everybody. Just sort of as background and to let you know a little bit about me, so I'm the managing partner of Real Ventures. Real Ventures is the largest, most active early stage investor in Canada. We have over 100 active companies in our portfolio, and the value of those companies is several $billion. So we have a good pulse on the ecosystem and what we're seeing. To your point, it is very different from traditional small businesses in a couple of ways. First of all, John, you quoted the stat around 75% of small medium businesses have less than 2 months cash reserves. It's different with venture-backed tech startups, which typically will raise money, and they'll raise money for the next at least 24 months. And then, so depending upon where that company is in their funding cycle right now, they've been hit either more or less in terms of the impact, in terms of their runway. And then secondly, because they are tech businesses, often they have a greater ability to pivot quickly. So definitely the situation is not nearly as dire as we see for traditional small, medium businesses, particularly those with physical outlets. That being said, we have seen significant impact in terms of our portfolio. We're rating every company as either a really big hit to sales, sort of medium, small to medium hit, no impact, or then positive. And so the good news is we are seeing several companies in our portfolio that are actually that are benefiting from this situation. So in that bucket, it would be companies such as we have a company called GradeSlam, which is in remote learning, remote tutoring. They're doing well. Another company in our portfolio called AvidBots, which produces autonomous robots for cleaning. So they're doing well. Anything that digital companies which replace human beings with digital processes are doing well. That being said, there are companies that are getting harder hit. So companies that are in the travel space, that are in the restaurant, hospitality, live event space are getting the hardest hit. I think in terms of what we're seeing entrepreneurs respond very quickly. I must say that the thing that I am most impressed with and that continues to motivate me every day is the spirit of the entrepreneurs who we work with. And I see huge resilience, determination, and perseverance, and not a complaining mentality, but more, hey, you know what, we're going to keep going. We're not going to let this kill us. And as I said, they do have more flexibility than a traditional small, medium business. And so some companies are pivoting their business model to fill new gaps. Other companies are really doubling down, types of companies that I talked about that are benefiting. Other companies are rethinking their pricing, giving away a couple of maybe the 3 months free trial, so they're moving in that. So again, I can definitely talk more about each of those different ways and examples if you like. I think then the other question in terms of the impact is to the VC ecosystem and what are we seeing? We are still seeing some of our companies get funding. There has not been a complete shutdown in VC funding. We have some of our companies, I mean, definitely a slowdown, and some companies have had their rounds just put on ice. Companies who are raising funding. Other companies, because they're in a better situation, they're benefiting from this situation, are raising money, are closing rounds in the last week or two. And in terms of VC as an asset class, if you look at the last two recessions, equities were down 40%, venture capital and private equity was down 20%. So, and if you look historically, there have been a lot of great tech companies and a lot of great funds that have started during a down period. So for instance, Andreessen Horowitz, who many people will know, a very storied Silicon Valley based venture capital firm, they closed their first fund in 2009. Other examples of companies that really sort of got started during downtimes, things such as Airbnb, Uber, Dropbox, like there is a handful of those companies. So from a tech standpoint, I would say again, varies by company. Some are benefiting, some are struggling.
Sure. Just and a quick follow-up. It seems to me that one of the features that we've all observed is in the tech community is trying to figure out what is the sustainable business model. And of course, a lot of tech space has gravitated towards advertising kind of business models. How are those holding up, given that a lot of that times the advertising comes from more sort of physical goods sectors, and presumably there's big cuts there. Any just quick commentary on that?
Yeah, so my understanding is that Facebook advertising, as an example, is down significantly.
Yeah, saw that.
And so, yeah, so generally speaking, advertising is down because generally speaking, consumers are not spending a lot of money. So that is one sector that we're seeing is down. And I think the biggest question that everybody's wondering and nobody can really answer is how long is this going to be down? Yeah. And what does the world look like afterwards?
Yeah. Well,
I think we all agree, hey, it's not miraculously going to go back to the way it was 6 months ago.
Yeah. Yeah, for sure. Good. And I think that's a good transition to talking about what can businesses, and let's maybe keep with our kind of categories here. And John, I'll start with you in the small business sector. After painting the picture of a pretty dramatic, downshift and, draconian response, what can small businesses do, as companies to kind of survive this this moment that we're living through here right now? What advice are you giving out to that community?
Look, I mean, I think Janet did a good job of explaining the real difference between small business in this country, right? And so a bunch of different businesses are lobbying for different things. I think for those businesses that are still able to keep people employed, so non-tech, but also non-local community business that I was describing before, they're all scrambling to get the wage subsidy to see if they can just make it through on whatever cash reserves they might have or be able to get. I don't have a ton of advice, honestly, Tony, for the folks that I've represented, and I think there's a bit of I think the media is doing a bit of a disservice, frankly, by focusing on the pivot to takeout. I think Jen Ag, who is a restaurateur in Toronto, does a great job in swearing about this topic, where she says, maybe I could pivot to takeout, but I can't survive on that.
Yeah.
And so, there's in the search for balance, I think there's been a lot of effort put into the wonderful stories about small businesses that have pivoted to what have you. They're all still going down. So I think if you're talking about local community retail, the only advice is to pray that the government response will be different over the next couple of weeks in order to help you get through.
Okay. Wow, that's dramatic. And so different is an interesting choice of words. We're going to come back to that, John. a little bit on kind of government response and what you think. And I know you've got some ideas about how government can help small business more. Kevin, for businesses that are more consumer facing, more established like WW and so on, what kind of advice do you have out there for leadership in those types of organizations?
It's interesting because even for some of the businesses that John was just talking about, if the frustrating thing about the current situation is it is pretty cheap to market right now, right? Janet spoke to it, that the marketing levels are right down. So if you've got something that's relevant, and I think that's the real challenge right now, is finding the proper tone. We've done a lot of work researching into consumers on, there's a body of thought that says nobody should be marketing right now, nobody should be advertising right now. And I think with certain instances, you can do it in a way that is pretty tone deaf, and I won't call out any specific companies, but there's definitely some prominent ones that I would say have done a bad job of it. And then there's some that I think have done a really good job of it. I think that, Subaru, for example, comes to mind, where they actually took their automotive buy and they said, we're not going to talk about our cars. We're going to thank the frontline workers. Now, that frontline worker theme has been something a lot of people have got on. I think that's starting to lose its resilience as well. I think the bigger play is if you actually have a genuine way to help. Companies that are helping and are talking too broadly about how much they're helping, I think that's also falling on deaf ears. But if you're doing it in an appropriate way, and if you actually have something, a bank, depending what you believe about, some of the strings that may be attached, but a bank that is genuinely trying to help people work through a financial situation and is marketing that to somebody in a way that helps them understand that they've got a solution for them, that's genuinely helpful. And that should be out there, and it should be made available to people. And I think people would be receptive to that. And if you've got that kind of solution, I think that's part of what we're wrestling with right now is figuring out the right way for us to tell our story. But if you've got the right solution, there's genuinely an opportunity to market right now because it is so inexpensive.
Yeah, interesting point. Boy, and it just makes me think how nervous times it must be for people in marketing and advertising to get the message right and to, of course, do the right things as well, and not oversell. Like that's a really, I think, kind of good point to add. And I do think, just to your point about this idea of there's some great opportunities. I mean, we saw that in the last, downturn over a decade ago now, but where CPG companies took the moment, those who were especially in a, positive space, maybe a little more in the consumer staples and so on, said, we're gonna double down on moving our brand to where we want it to be, because this is a great opportunity given that everybody else has done what companies always do: cut advertising, cut R&D innovation spend, and so we can take advantage of that. But it takes courage, right, to operate that kind of counter-cyclical kind of approach. Anything to follow up, Kevin? I'll go to Janet.
Yeah. Let me just add one additional thing, which is we're in a point of change, right? There's a point of disruption. So in addition, from a marketing point of view, there's a real operational or strategic opportunity that sits with that as well, which is, we were talking about, I wonder how should we work in more virtual to some of our offering? Well, guess what? We had to do it pretty quickly. Yeah. Now we've got a chance, while our workshops are not physical, to say, what do we want that to look like as we come out of this? What do we want the new normal to be? So, right. If you've got, to Janet's point, if you've got the resources to weather the storm, and admittedly, John paints a very accurate picture. I come from a small business background myself, and I know what my brother's radio stations can absorb and not absorb before he has to make some really tough calls. But if you can weather the storm, you've got a chance right now to actually take a really fresh look at what you want your business to be as we come out. And therein might drive some really, really interesting innovation.
Yeah, great. Janet, let me turn to you. Same question. What are you telling your stakeholders, particularly, I guess, the funded companies you work with, and so on, about strategies to deal with this moment in time?
Yeah. So thanks, Tony. So I think the first, sort of at a simple level, sort of there's three steps: understand, adjust, and make sure you have enough runway. So the first step is really to understand the impact, which In some cases, it's really simple.
Yeah.
As John would say, a lot of his businesses, it's pretty darn simple. In some cases though, if you're a software company that's selling to enterprises, maybe you're still talking to customers, but it's unclear, hey, how exactly is this going to affect my sales cycle? So figure out, hey, exactly what are we dealing with? Are we dealing with a 10% decline or 30%? But really try to understand. And then the second thing is, assuming that it is a negative impact, as I said, some of our companies are actually benefiting from this situation or seeing the sales growth in this situation. Then the next thing is, okay, how are you going to adjust? And that adjustment, right now I'm talking about adjusting in terms of, maximizing your revenue. And so I'll give a couple of examples of what some of our portfolio companies are doing that might serve as useful examples. We have one company called Plum.io. They have great software that helps companies make the best talent acquisitions, acquire the right people for the right jobs. At this particular stage, not many large enterprises are focused on hiring the best people. So they have shifted in order to use their tools that really helps to understand people to help teams work most effectively in a remote work environment. And so they're having a lot of success with that. We have another company called Sonder, which is historically focused on short-term accommodation stays. They have shifted, and so they are really focused on 14-day plus stays and targeting it towards people such as college students who need to be out of their residence but need a place to live, hospital workers, healthcare workers who don't necessarily want to go home every night. So then I could go on, but you get an idea in terms of how different companies are adjusting either their offering or in some cases their pricing. So for instance, another company in our portfolio, League, is offering for their enterprises a 90-day free trial of their platform. So anyway, so as I said, the first thing is understand, second thing is adjust, and then the third thing is in terms of managing your runway. And so we are working with all of our portfolio companies to make sure that they have at least 18 months of runway in the bank. And that can be through a combination of trying to increase your revenue, trying to decrease or decreasing your costs, and or raising money. And so I can either get into that now or later in terms of how our companies are doing in terms of raising money. But I do think that this environment for startups, it is requiring that founders bring an even increased level of discipline, of focus, making sure that they have the business fundamentals right, and that they are very mindful of the unit economics. So I think that we will see in the startup environment a real dichotomy between some companies that are going to make it and are going to come out of this even stronger, and other companies that aren't going to make it. Warren Buffett has a very famous quote that, when the tide goes down, you can see who's swimming naked. And I think we'll see a little bit of that in the tech sector for sure.
Right, since we've kind of been coming out of we were in a high tide for seemingly a long time, for sure. Good. We've got kind of two more pastures that we are going to kind of hit here. One, a little bit to talk about, what is government doing, or what can they do, and can they do better? We'll start with John in a minute on that, and then a little bit of time at the end to talk more broadly about what does this mean going forward in sort of a future landscape. But I'd like to just pause here and see if Mark Healy's got a question from the audience. We want to make sure this is engaging for all of our people watching here, our webinar. Mark, anything you want to throw into the mix?
Yeah, I think, there are a fair number of questions here about which industries are impacted more, which ones are impacted less, sort of regardless of business model. So that might actually be a good bridge here, because one of the flavors of the question is a one-size-fits-all government approach appropriate, or should we actually be responding differently depending on the industry? You think about restaurants, you think about tech, in two sort of very different places, almost regardless of size. Right. So maybe, Tony, you could use that as a bridge to get into kind of this discussion about government response.
Yeah, I think that's actually great. John, why don't I throw that over to you? So we've sort of had this kind of size category, but of course, even within your small business stakeholder group, there's lots of variation there too, I'm sure, even though you've painted a fairly dire picture across the landscape. Any thoughts on the, how variegated should government programs be, or is it at this point your view just like, let's get a lot out and get it mostly right and worry about the nuances after? What's your thinking on that?
I think it's both of those things. But so the way other countries have looked at this is they have selected certain industries that are most affected. Mark, you described them there, and have targeted more help for those. I think that's an incredibly obvious thing to do, and most other countries have done it. We haven't. I think among the small business community, absolutely. If you define it three ways and say, okay, you've got businesses that still have employees and still have revenue, they need wage subsidies, they need small loans. If you think about the tech community, they need loans without much in the way of restrictions in order to get through, whether that's tied to equity or not. That's what they need. They're used to the idea of hitting a home run and winning, and used to the idea of going down hard if they lose, and so that's where loans are appropriate. And then there's the small business, the segment of small business that have no revenue or almost no revenue and no employees anymore, and they need actual money, so grants or fixed cost supports. And that's kind of been the structure of the approach in England, in Australia, in Denmark, in France, but not here. I think philosophically, the way some countries have looked at this has said, okay, look, this is not, no one's done anything wrong. Okay, this is a public health crisis. And in a public health crisis where we've asked people to do certain things, it's our responsibility for those people not to lose their livelihoods or their businesses as a result of that. And Denmark is an example of that, where they've effectively frozen their economy for 3 months. And partly it's a way to avoid some of the conversation that's happened so far, where we've said, well, who can take advantage of the situation? I mean, listen, I get that there are opportunities, but how terrible is that, right? How much is that the wrong answer to what's happening right now? This is a public health crisis. People have been asked to close their doors and have been prevented from earning income. So, I think Australia is now talking about 6-month hibernation. That's how they're describing it. I think we are so far in Canada have done some things right, largely for individuals, which is good, right? I think people are working hard, and I think that has to be the kind of the starting point. Everyone's working hard and everyone's trying to do the right thing, but there are models out there. Everyone around the world is dealing with the same thing at the same time, and there are models of people or of countries who are showing more sympathy for the idea that this is nobody's fault, and are trying to offer supports that are equal to the task of saying, when we come out of this in 3 months, 4 months, 6 months, we should be at a similar place as much as possible as how we went in.
Yeah. John, just a quick follow-up. So in your op-ed in the Globe, you talked about how burdening small business owners with loans is sort of this I took as the centerpiece of your critique. And is that still your view? I mean, I feel like there's been some adjustment in the policy programs, or some pieces of those that are you don't have to pay back, it's zero interest and so on. But is that still the idea you would have, is that we need to do more sort of direct support not in this kind of conditional loan with, houses pledged and things like that as collateral? I mean, is this kind of where you're going?
For sure. I mean, and you don't have to pledge your house as collateral. It's a fine loan as loans go. I think the problem is it comes from an extraordinary place of privilege, where the Ministry of Finance, full of people for whom loans is the answer to every problem and is the easiest thing for people in the world to do, recommending that for everyone as an answer to how you pay the rent. And right. I think we have to think about unequal outcomes and privilege in this circumstance, where you have people who are afraid of loans, who require advice in order to enter into anything like that, who are first-generation Canadians who may not be able to navigate structures as well as others. I mean, that's the picture of what local communities businesses look like. So the idea of saying, hey, don't worry, we've got this great loan. And there's just one more thing to add, which was a great line by a small business owner who said, okay, I just want to make sure I understand this right. You've told me that I'm supposed to close my doors, can't make any revenue. You want me to go and take out a loan in order to pay the rent so that my landlord gets every penny of what they're supposed to get, so that they can pay the bank the mortgage so they get every penny of what they're supposed to get. Why aren't we making the landlords take out loans? Right? Why is it the flower shop that should take out the loan? So I think we have looked at this through a pretty narrow lens, and as a result, the tools that we're using are not fully equal. Loans are fine, but we need more.
Yeah, got it. Kevin, what would you add to the story here on government response and adequacy, nature of it, size of it? How do you view, and especially a little bit different? You're not a startup small business per se, so.
Yeah, no, I think, but it's interesting because the government generally has, to John's point, taken a one size fits all. John, you used the concept of hibernation. The one that I've used, the analogy that I've heard that resonates with me is it's a medically induced coma. And unlike maybe some situations in the past, like 2008, 2009, it's not sectorially driven, sectorially specific, country specific, it's global. And so if we think that the economic impact is going to, small businesses will be hit dramatically, so will, pick your sector. If the automotive manufacturing doesn't get going again, then what does that do to metal prices? If we're not building homes, then what does that do to forestry? Like this will be significant. And I think the issue right now is what's been put in place, and I give the government full credit actually, because I think they've been working hard at it, and I think they've already pivoted a few times and tried to address some things. So it gives me a lot of confidence that they'll continue to do that. But I think there's companies right now that are able to take advantage of it that maybe shouldn't. And that will have to be addressed at some point. And I think that there are a bunch of, to John's point, areas that it hasn't necessarily been as well designed as it could be to allow people to take advantage of things. There's also a more profound, we will come out of this at some point. And at some point we need to start to think about what does that look like as well. And I'm not sure that's been really conceived of in the current structures that people are putting in place. There's an advanced look on a whole bunch of kind of sectorial funding that will need to be considered as we're going to have debt overhangs like the world hasn't seen. And it will be really, really interesting to see the impact of that on government decision making as we come out of this.
For sure, and we'll probably won't have time to talk quite about that, but that feels like a good topic for a future seminar, Kevin. When we come out of this, what happens with all that debt mountain and other issues? But I think you're raising one point that I'll just flag before I turn it over to Janet on the same question. But and it's really the relationship between small business and what you might think of as sort of the anchor stores or the bigger players, because this is the story that came out of, for sure, the government bailouts last time in the auto sector, is that if we let General Motors go down, then the cascading effect down into tier 1, 2, 3 suppliers has a massive impact across the spectrum of size and type of company. So you got to kind of play in both levels, right? And make sure that kind of cascading destruction of all this web of relationships and built up trust and contracts and so on doesn't break. I think that's the key thing, is don't let this demand side destruction turn into a massive longer term supply side destruction with bankruptcies and so on. Janet, from your point of view, again, tech venture, government, programs and orientation. I mean, you guys down there in that libertarian small startup tech sector, I don't know, how are you feeling about all this government stuff? Sorry, I
well, one thing, I think a couple points. First of all, there has been a lot of press and requests from the tech sector, which has said, hey, in order to qualify for a lot of these programs, well, for the wage reduction help, you have to have a 30% drop in sales. But that 30% drop originally came out year over year. Well, for a tech business, right, that doesn't really apply, right? Because they are planning on growing 100 or 200% year over year, and so they may not do that. And so I know the government has recently adjusted that so that the measurement, it can be March versus January, February, and how much did your sales drop? Still disputes over that. Another thing, I just, one of our founders, Mike Serbinas, is founder of a company called League, he just came out today and just tweeted that he's more likely to get help from the US than the Canadian government in terms of stimulus and support for his business, even though it's a tech company that's based in Toronto with the majority of the team in Toronto. I have a couple of other tech companies that operate in both the US and Canada, and they say the same thing. It's easier, more generous programs in the US than in Canada, which is sort of interesting. I mean, that being said, I would say the BDC has been creative. They're coming in with programs. They've just announced something very recently, like during the duration of this call, they have come out with their program. And I think that they are definitely seeing what they can do to respond to the needs of the tech sector. But there's no silver bullet here for sure.
Yep. Yeah, good. And folks, we've got about a little less than 10 minutes left. I do want to talk, even though it's totally appropriate to talk about the moment we're in the crisis situation, but obviously this is one of those, landscape changing events that's going to have far reaching impacts. And I'd like you to all just, if you wouldn't mind weighing in a bit on that. And maybe Janet, I'll just come back right back to you with that question. We've had so much attention and as always in Canada, hand-wringing about the strength of the, Canadian innovation, tech ecosystem and so on. What does this crisis mean for that? If you could sort of speculate a little bit on that kind of piece of it, is this something we should be kind of, is this the end, or is this just the beginning?
Well, I mean, I think to your point, just to share some stats in terms of the Canadian booming tech ecosystem, which we've read so much about, the dollars invested in early stage tech companies has doubled in the past 3 years. The Toronto Waterloo area specifically has had the second highest density of startups anywhere in the world and the highest concentration of AI startups anywhere in the world. The region was recently ranked as the best overall North American ecosystem. So to build a tech company. So again, lots of great momentum, as you said. I mean, I guess I'm an optimist and I believe in the resilience of entrepreneurs. And I think that when we this is tough times. Absolutely, there are tough times here and there are tough times ahead, and they're not going to be over tomorrow. But when I think about the fundamental things that are needed for a strong, successful tech ecosystem, I often talk about 3 things. You need talent, you need ambition, and you need funding. And so our talent is not going away. We still have, more AI students graduating every year than anywhere else. I mean, I could go on with the stats, but you get the idea. I think the ambition of our founders will not change. There's a question around funding, but I think that what we have consistently seen in the past is that in bad times, the money flocks towards quality. And in terms of the ability for our Canadian tech companies, now I'm thinking 12 months, 24 months, 36 months out, they are very high quality. Canadian tech companies they deliver a lot more for every dollar than Silicon Valley companies. There's, again, lots of stats around that. And so I think that long term, I'm not worried about Canada's place in the global ecosystem. Yes, we need to support them. We need to do the things that are right. But I think we're gonna get through this, and we're gonna be stronger than before.
Good. Well, thank you for that, and that's good news. Maybe I'll just go to Kevin here if you could just say a couple of words. We've got just a few minutes left on, changes you're seeing that you think are going to be kind of lasting, maybe secular changes that come out of this in the social and consumer preference and media space.
Yeah, happy to, Tony. I've been spending a lot of time thinking about that, because if I had a magic 8-ball or something that could answer it for me, that would be really helpful. But I do get the sense that I do get the sense that as we think about consumer attitudes, marketing effectiveness, all that kind of stuff, which I know really hasn't been the focus of the conversation generally today. But there are some things that I think we need to get our heads around. And I don't have the definitive answer, but some of the areas that I'm noodling on is, to what degree is there going to be a new acceptance of kind of a virtual life, whether that be online shopping, food delivery, work from home, virtual as a component of a service offering. I mean, we talked about educational delivery. A lot of these things were kind of on the agenda before we came into this, but now they've been fast tracked. And so there will be some sort of ongoing impact of that we're trying to get our heads around.
So you don't think people will just sort of say, wow, that was horrible. I want to get out and, and hug people and shop and interact. And you think it's going to be more, we're actually going to, learn to do this and think this is the way it goes?
There will certainly be elements that we won't want to let go of. There's a big debate about, will I accept crowds and community when I come out of this or not? Some people argue that we're starving for it, and so that'll be immediately what we want to do. Other people are saying, wait a minute, that might not be our attitude. And then probably the more pragmatic answer is, immediately coming out of this, we won't be allowed to anyway. It'll be staged out in some way that won't do that. Again, another element that we're thinking a lot about is, I grew up with, my dad was a World War II baby. Not quite grew up, he was a kid during World War II. That means we ate Spam. He took a bath in a bathtub that had like 2 inches of water in it. Like, these things get built into you, and they don't change. Now, that was years of behavior. What does months of behavior result in? But I do think we might have a make do with less. People will have reset their expectations. A bunch of people have gotten comfortable being home cooks that maybe weren't before. A lot of things like that. And then the biggest one that I really wonder about is people's attitudes about employment. Will you have fewer people wanting to have their own business? Will you have fewer people wanting to do a startup? Will people look for more job security than maybe they once had? And that will run up against companies that are actually probably looking for more cost flexibility. And how those two, requirements will collide, and how that will resolve itself, I think will be really, really interesting.
Yeah, for sure. Listen, we just got a couple of minutes left. John Shell is going to stay on a little bit after and take a few questions. I will as well. And Kevin and Janet need to run and get on with your days. But so I'd like to say thank you so much to both of you for coming and sharing your insights and perspectives. And we'd love to have you back at some point when the dust is settling a little bit. John, do you want to just give us a quick wrap up, and then we can take some questions from the audience here, and your view, small business community, and the kind of how this is going to affect the landscape going forward?
So I'm going to use this rare opportunity to speak to this community to not talk about that, but instead to pose a challenge to Ivey and business schools in general in terms of the questions that will come out of this. I think there will be people asking questions about globalization when this is over, whether that has been a good thing for us or not a good thing for us. There'll be a question about how different jurisdictions think about tax rates, and how different jurisdictions think about their social safety nets and how important those are. There'll be questions about monopoly, right, and their role in sort of coming out of this as companies are weakened and as industry concentration increases. And I think there'll be questions about how we have financialized our economy, or with things like share buybacks, which have massively left companies underprepared to deal with issues like this, which have resulted in layoffs and unequal outcomes. And I don't think business schools do a very good job of helping the business leaders prepare for these questions. And I think over the last few years, some business schools, Oxford namely, have started to change and engage in a wider and more thoughtful way to think about the world and the role of business in it. And I think if we leave it to macroeconomists to figure this stuff out and count on business to protect their own interests generally, which is what we're taught to do in business school, I think we will struggle. The business community will struggle with the questions that will be raised over the next few years. So Ivey, I think I would say, has been slow to change in terms of recognizing some of these shifts and how people think about the world. And I would encourage this moment to rethink some of that. So that's my challenge.
Well, touche. Challenge accepted. But I'm going to put it back to you that you have to come and be a speaker in my class at some point on some of these issues that, by the way, we need to also make sure you know what we are doing currently in our curriculum, which is at least something around social responsibility and role of business and even things like inequality and dynamics and so on. But your point is very well taken and well received. So Mark, do you want to just close us off here, and then John and I are going to stick around for a few minutes?
For sure. So we're, as usual, up against it on time. As usual, tremendous engagement from the audience. We didn't get to all of it. We'll try to do that. But I want to thank Kevin and Janet, who I know have to run. Thank you. Thanks so much for all the work you put in ahead of time and being here today and taking time to do this. So thank you so much. And for our audience who has to go, thanks for tuning in. We'll be on again next week. And for anybody that can stick around, John, Tony, and I will be here.
Very good.
Thanks, guys.
Thank you, everybody.
Okay, John, I already want to build a program around you. And exactly.
I only decided to do that about 6 minutes ago, so I apologize.
Don't apologize at all. It's the point's well taken. Okay, so here I want to do a couple of categories of questions. There are a million of them here, but there are a bunch of questions kind of in the macroeconomic sphere, and then John, there are a bunch of questions kind of in the small business sphere. So Tony, maybe we'll start with one of the macro ones, which is and there are lots of specific ones. What about Asia? What about India? What about Bangladesh? What about developing countries? Can you maybe just talk about, John, could you follow on? How do you see impacts being different in the developed world versus the developing world? Or you could take a country by country approach to your answer if you want.
Well, let me start with a little bit of the macro landscape on that. You know, it's still early days in this, so we haven't necessarily seen the full peak of this by any means, because the virus, in fact, of course, is still spreading, and in healthcare systems that are much less able to deal with the crisis than we are. So it's going to be horrible from I think a health and life perspective for sure. So I'm just going to park that there and say that's coming. But what we're seeing is, as we always see in a risk-off world, is we see massive. In fact, you know, I joked last week about using the word unprecedented too many times, but unprecedented outflows of capital from emerging markets, and so you see, you know, big financial system impacts. Of course, what emerging markets did, a little bit to John's point in the corporate side, if corporates leveraged up and did share buybacks, what emerging markets often did was to take on debt, often in USD because interest rates were cheap. And now with vastly depreciated currencies because of the outflow, they're left on the hook with that. So we're going to see some major blowups coming out of here on top of the health impact. So, you know, I really feel that that's going to be we're all worried about ourselves here, but that's going to be, you know, the big story, I think, or one of the big stories in the landscape going forward. And how do we help that community recover from this, which is, of course, you know, more than half of the world population.
John, do you have a view on
this?
Small business?
Yeah.
Sorry?
John, do you have a view before we go to a specific question for you?
No, that's okay. Yeah, I mean, that's not my area. Whatever, Tony. Sounds like Tony knows this pretty well, so that sounds good.
Lots of questions here. Kind of a follow-on to that. Are different sectors, you know, sort of hit differently? One of them is about kind of the gig economy and how that has been in vogue and cool and maybe a bit risky for you know, especially the past few years. I'm sure you've thought a lot about gig economy. How do you think about that now?
Yeah, look, so we did a lot of work on thinking about future of work. And I remember we brought someone in who was, you know, kind of a gig economy person. They lived life traveling around the world and were super excited about it. And so it came in, we had some questions with them, and I asked her about, you know, retirement and buying a house and, you know, kids. And she said, you know, I'm not worried about any of that. Like it's all going to work out, right? And didn't want to engage in any of those questions. And, you know, it struck me that our safety net is completely unprepared for that attitude. we built a social security system around people having full-time jobs and paying into our pension plan, through that. But the gig economy lives outside of that. A ton of those people. So she right now is probably getting absolutely hammered, right? Maybe in both ways, from financially and probably just drinking a lot. And so I think the sort of innocent, everything's going to work out view of what freelancing is dead. And so I think it will be the freelance community, the business community, because Kevin talked about becoming more virtual, companies becoming more virtual out of this, which is a frightening thought from a social safety net kind of risk perspective. That community and government are going to need to figure out what is a new form of safety net, because we can't have a society in which we have people who are 50 and up, who have their pension, some of it's defined, who are probably going to be okay because the CPP will be fine, and all of that for a while. And, the 20 to 40-year-olds who have none of that, right? And that's where we're heading. And this thing might accelerate it. So the generational challenge of what's happening right now, I think, has been under-described, and it was already happening, but this is such a massive accelerant for so many things that were already happening. I really, unless we think very quickly about how freelance ought to be structured, I think we are in a decade to come going to be facing a very serious problem.
John, I have a follow-up actually, to do with that and starting new businesses. There's a question in the chat about opportunities created by sort of absences in the marketplace right now. And I'm wondering if you have any thoughts on the idea of people looking to start new businesses, whether there are any pitfalls or if is it all opportunity?
Look, I think there's going to be a lot of space available. I think there will be room out of this. So here's the optimistic viewpoint. We've been stuck on business models for a long time that have been resilient because people happen to walk by. And we have been in need of new business models for a whole bunch of different service and retail oriented. We've gone recently in two directions. Either you have like your bricks and mortar retail that still exists, bricks and mortar service that still exists, or you have entirely online approaches that have silver bullet answers with hockey stick curves that can be sold to a VC. There is massive opportunity in between those things. Yeah. People still want to interact with other human beings, but people want a service that is more tailored to their digital lives. The combination of those are hard to fund, require more capital at the start, and require more hand-to-hand execution. So I think there are huge opportunities to create models like that and franchise models like that in a completely new way to franchise, right? Because the franchise model has also been stuck in the mud for a long time. I'll give one example. There's a company called Wonder School in the US, which was created in order to help early childhood educators form their own daycares. It's a very different franchise model. They only get paid for a couple of years, then they go away forever. But it's very digital forward, super thoughtful. We need a whole pile of those type of structures. And if the people who start them with more of a how do we all do this together approach, I think we could have better systems and better small business models coming out of this. There's a little bit of optimism for what has been a very dour take by me.
It's funny. I was in Toronto before all this collapse, right? And one of the things I said at this talk I was giving was it's weird to me that, and you see it in LinkedIn and your feed all the time, right? It's weird to me that we celebrate starting business and raising money more than we celebrate businesses that stay in business. Weird. It's such a weird thing. Well, that's not going to be true anymore. Do we have time for one more?
One more, yeah. For me.
Okay, let's do one more question. So there are a whole bunch of questions around kind of that 3-month time frame. If this lasts 3 months, because that's most of the prediction, where are we in 3 months macro, and where are we in 3 months micro? So maybe Tony, to you, macro 3 months from now, and assuming we don't have a whole bunch of change in the government response, which probably we will, but where do you think we are in 3 months?
Well, last week what I said, my baseline prediction is we're going to take the elevator down and the escalator back up. And I guess I'm sticking to that. I know that I feel like the sort of modal economist position was kind of V-shaped recovery. I'm less sure about that. I feel like both because I do think there's going to be necessary conservatism and on how quickly we come out of the lockdown phase, so that deep freeze. So I could easily see this happening, unless there's some unpredictability here in terms of seasonality and whether we can mobilize enough testing plus contact tracing to really kind of make all that work. But I guess I feel like that's optimistic to say by September we'll be kind of fully rolling again. I don't see it, and I flagged a little bit last week as well, Mark, the scenario that I think causes everyone a lot of concern, which is this sort of sine wave of coming in and out of deep freeze as we come out, we step back up, we get infected, and we climb back down, right? And that's something that companies, especially larger companies, have a really tough time, strategizing around and just supply chaining around, in and out of gas break. So I'm not super optimistic. I feel like we're going to kind of be in that 3-4 month period, we'll be coming out, but there's a threat we're going to kind of go back down.
Maybe
Sorry,
John, where's the small business community in 3 months if it's locked down?
Yeah, like if it's 3 months, it will depend entirely on the government response. I mean, there's nothing they can do. So, over the next 2 or 3 weeks. So as of, I think, the 15th of April, businesses can start to be locked out of their businesses by landlords if they didn't pay the full April rent. In other countries, there's been a moratorium on evictions, right? So 6 months in Australia. So I think what our communities look like, because there's nothing our communities can do, if this thing does get eased in 3 months and people get to go out and go to their local community shops again, whether they are still there will depend entirely on the government response over the next couple of weeks.
I know you got to run. Thank you. Thanks again for doing this. Let's connect offline about some other opportunities too.
Sounds good. See you, everybody.
Good.
Stay safe out there.
Cheers.